Hello everyone, welcome back again. In today's video we are going to be looking at the stochastic indicator. In this video I'm going to be showing you 3 ways that you can use the stochastic indicator if only you want to maximize your profit and minimize your losses. Stay tuned and watch to the end as I will be sharing one of my most powerful strategy that is only known to my premium students. I am Oya Benjamin, and this is Xander FST. We provide you with day-to-day tutorials and trainings that help you maximize profit and minimize losses. Let's dive into the video properly. Stochastic indicator is an oscillator that looks at the momentum that is driving the market trend at the moment. Now when we talk about momentum simply means force. Okay, now the stochastic indicator looks at the force that is driving the market at the moment. Now just like I've explained here, if you look at what we have here, you discover that this market price started from here. The bullish momentum pushed the market in an upward direction. Okay, now gets to this point, the bullish force driving the market in an uptrend begins to reduce. Okay, now at this point, the third one, it has gotten to the distribution phase. At this phase now, the bullish power that had been driving the market could no longer carry the market further. Something will begin to happen. The sellers will enter in and there will be a change in momentum from the bullish momentum to the bearish momentum. The stochastic indicator consists of 2 levels, 80 and 20 levels, which is considered as the overbought and the oversold levels. Now let's proceed as I show you the 3 ways that I use while trading the stochastic indicator. The first method is the crossover of the stochastic. Once the price crosses above 80 level, the market is considered overbought, because at that point there will be loss of the bullish momentum that is pushing the market upward, and the market will reverse and start coming down. And once the price crosses from 20 to 0, the market is considered to be in an oversold condition, because at that point there will be a reversal in the price movement. Why? Because the bearish momentum that has been pushing the market in a downward direction will begin to lose its strength. And at that moment that the sellers could no longer push the market in a downward position, there will be a reversal. I've watched a lot of traders use this indicator while trading, and the mistake a lot of traders do while using the stochastic indicator is that once the price crosses this 80, they initiate a sell order. And once the price crosses below 20, they initiate a buy order. That is the wrong way of using the stochastic. Okay, it's only a signal to show you as a trader that the buyers could no longer push the market in an uptrend. And once this occurs, there will be a reversal in the price movement. Another mistake also I discover a lot of traders do, once there is a crossover, you see them initiate their market. No. If you look at this particular chart, you'll discover something that the market crossed over here. Okay, now if you have initiated your trade at the crossover, you discover that now the market crossed over and went up again. You will be knocked out of the market before the main thing occurs. Now, how do you trade the stochastic crossover? Now, number one, as a trader, one thing I want you to understand, now once the price crosses above the 80 level, you must make sure that the K line and the D line are below the 80 line. And once it is below the 80 line, that is when you will enter your sell trade and take your profit. Now the same thing applies here. Once the price crosses below the 20, I will advise you to enter a trade. Once the K and the D line crosses above the 20, that is when you initiate your buy order and take your profit. Now let's look at the next method, which is trading stochastic using the divergence strategy. Now, a divergence occurs when two elements moves in an opposite direction to each other. You look at this line here, you discover that line A is moving in an upward direction and line B is moving in a downward direction. You discover that these two lines are moving in an opposite direction to each other. Okay, now this is what a divergence is all about. In trading the stochastic, we use the divergence. The divergence strategy gives us a signal of reversal. Now, before we continue with this method, I would advise you to add the 200 moving average, whether exponential or smooth, to your choice. Okay, how do I trade this divergence? There are things I want you to take note of. Number one, you must look at the position of the moving average, okay, and the market trend. Now, if the market trend is above the 200 moving average, it is advisable that you initiate more of the buy order. And if the market trend is below the 200 moving average, it is advisable that you initiate more of the selling order. The next thing I want you to do is to look out for your divergence. Looking at this chart here, you discover that the market made higher high, the indicator made lower highs. Okay, you will see that a divergence occurred here. I always consider the direction of the indicator. That is where the reversal is going to be. Another thing I want you to know is whenever the price trend is above the 200 moving average, you should always look for a bearish reversal. Okay, now if it is below the 200, you should always look for a bullish reversal. If you have stayed to this level, I congratulate you. Let's look at the third method, which is trading the indicator with the 50 level crossover of the stochastic. Before we go to this method, we're going to apply some settings. Now quickly go to your stochastic indicator. If you are with me, go to the settings. Now I want you to uncheck the 80, uncheck the 20, leaving only the 50. Now we're going to be making use of the 50 only. If you're using the MetaTrader, go to the indicator, go to the stochastic indicator, click on it. Now go to the levels, click on the plus sign to add another level, then change the levels. The first one should be 20, the second one should be 50, and the third level should be 80. Then click on the save button and your chart or your indicator will become like my own. How do we use this method? First of all, you consider the position of the moving average and the market trend. Just like I said, if the market trend is above the 200 moving average, now you initiate more of the buy trade. Now if the market trend is below the 200, you initiate more of the sell trade. Once the K line and the D line crosses above the 50 line of the stochastic, okay, and the market trend is above the 200, I will advise that you initiate a buy position immediately. Once the price, both the K line and the D line crosses below the 50 level and the price trend is below the moving average, I will advise that you initiate your sell order. I want you to try this method and let me know your experience in the comment section below. I believe that you have learned one or two things. But before you go, don't forget to hit the subscription button, share the video, above all, touch the notification button so that you'll be notified when I post my next video. On this note, I say, have a successful trading week ahead. See you in my next video. Bye.